How much should you set aside from a 1099 payment? The honest answer is there isn't one universal percentage. Two people can receive the same contractor payment and need very different amounts because their wages, withholding, business expenses, their filing status, credits, the state they live in, and other income are different. The useful answer is a process. Estimate business profits, estimate the complete tax picture, subtract payments already happening, and update the calculation as the year changes. My name is Mitch Caldwell, your modern day tax CPA, and I'm a licensed CPA here in California. This is general tax education, not individualized tax, legal, accounting, or financial advice. Estimated tax calculations depend on your complete federal and state situation. Setting money aside is a cash management decision. It means keeping money available so taxes do not become an emergency. Making an estimated payment is a tax payment decision. It means sending money towards an expected liability during the year. You may choose to reserve more cash than the next required payment. That does not mean every reserved dollar should immediately be sent to the IRS. If you want plain English tax explanations that separate useful planning from social media shortcuts, subscribe to Modern Day Tax CPA. We begin with projected business revenue, not just one deposit. Add what you have received and what you reasonably expect for the rest of the year. Then subtract legitimate business expenses that are expected to be deductible under the applicable rules. The result is projected business profit. Key self-employment tax and income tax calculations generally relate to profit or net earnings, not simply every dollar deposited. Suppose a side hustle receives $10,000 and has $2,000 of legitimate business expenses. The starting business profit estimate is $8,000, not $10,000. Next, consider the taxes that may apply. These can include federal income tax, self-employment tax, and state tax. Federal income tax depends on the broader return. Other income, deductions, credits, your filing status, and tax brackets all affect it. Self-employment tax is a separate calculation for Social Security and Medicare taxes. The commonly quoted 15.3% rate is important, but multiplying every deposit by 15.3% is not the complete calculation. State taxes and payment rules need a separate review. A federal estimate does not automatically cover the state obligation. If you or your spouse also receive W-2 wages, you have to review the federal withholding already coming out of those paychecks. Also, include estimated payments already made and any prior year overpayment that was applied to the current year. Ignoring existing withholding can cause you to reserve or pay more than your actual projection requires. Ignoring contractor income can cause the opposite problem. Under the general federal rule, estimated payments may be required when you expect to owe at least $1,000 after subtracting withholding and refundable credits. You also generally compare expected withholding and refundable credits with the smaller of 90% of current year tax or 100% of prior year tax. We call that a safe harbor. For certain high income taxpayers, the prior year percentage generally becomes 110%. There are also special rules and exceptions, so use the current Form 1040-ES and instructions and Publication 505. The amount designed to avoid an underpayment penalty is not necessarily the final tax bill. A person can satisfy a required payment rule and still owe money when filing the return. Keep in mind, it is currently July in 2026 at the time of recording. So for a calendar year individual, the next standard 2026 federal estimated tax payment is due September 15th, 2026. The next one after that is January 15th, 2027. The federal payment periods are not just 4 equal calendar quarters. Income that arrives unevenly may also require a different calculation rather than blindly dividing an annual number by 4. One option is to use the current Form 1040-ES worksheet and Publication 505, which we already mentioned. When W-2 wages are also present, increasing paycheck withholding may be another planning option. The timing rules for withholding and estimated payments are not identical, so confirm the treatment before relying on it. Qualified help becomes especially useful when income is volatile. Multiple businesses are involved, a spouse has substantial income, or the cost of guessing has become meaningful. You can use a separate savings account or a clearly identified reserve so tax money is not mixed with ordinary spending money. A percentage can be used as a temporary cash buffer when income arrives, but it should be tested against an actual projection. The percentage is a holding rule, not the tax calculation. Update your revenue, expenses, withholding, and payments at least monthly while the business is changing. A good estimate in February can become a bad estimate by August. Save confirmation for every federal and state payment. A payment without a usable record can create unnecessary trouble later. So the plain English process is this: project business profit, estimate the complete tax picture, subtract withholding and prior payments, check the current payment rules, and keep a separate cash reserve. Do not send a random percentage because a deadline exists. Calculate from the facts you have, then update the calculation when the facts change. Next, watch the business deductions guide because a reliable tax estimate begins with knowing the difference between business revenue and legitimate business profit.